Joe, Shaun, welcome back to Deals of the Week. We're in our final home stretch here of 2022. I think I can say congratulations to both of you guys to getting through this year. We all had very, very successful years. It's been a bit of a bumpy ride, but I'm very much looking forward to getting into 2023 with you. And yeah, happy to be here again with you.
Likewise. I think bumpy is an understatement. I think it's been very, actually, I think it's been very smooth now I think about it.
I like the term hand crank. Feels like every day is a hand crank.
How do you like this? Like the movie?
Yes.
Is that how you do your hair? You know, the hand crank?
Blow dry, Joe.
All right, the last one of the year, 64
Jesup
Place. This is in the Bronx. This is
it's almost like a biblical name.
Yeah, where does this exist? Is this like its own block?
This is a corner property, kind of by a little above Yankee Stadium, where we haven't even started marketing yet. This is the draft of the setup. We're asking $4.5 million for 38 apartments. The family that owns the building has owned it for a couple of decades. We're asking $118,000 per unit. It's a 6% cap rate, 8 times the rent. This is one of these highly financeable, pretty clean corner buildings in the Bronx. And this is really the story here. You know, when the middle of the page on the rent roll is filled with pref rent, copy paste, pref rent, you know, there's something here. So you have about $100,000 a year, about 20% increase in your potential rent roll between your actual and your legal.
So is the buyer for this building somebody that owns in the local area? Like, what's the identity of this buyer profile?
Yeah, I think it's a good question. I think the buyer is someone that owns in the general vicinity, you know, maybe not a stone's throw away, but in the western part of the Bronx, southern-ish part of the Bronx. And I think they're looking to add to their portfolio. The last deal that we sold in this kind of price point, we put into contract about 6 weeks ago. The buyer, it was a $6 million deal, and the buyer was in $1 million exchange and owned in the neighborhood. So so the stars kind of aligned, right? He's got like a little extra motivation for a smaller unrelated exchange, and he owns nearby, and he's in buy mode. So that's probably what the profile of the buyer is for this type of building.
Seth, I told you it was getting down to 8 times or less than 8 times rent in the Bronx.
And that's an interesting question. Are you starting to see a floor being established on rent multiple, or are we still kind of at whims of, whatever the interest rates is and negativity of the day? Like, are we starting to see a floor form or no?
No, I don't think you're going to see a floor. I was talking to a client of mine who was looking at a deal in Washington Heights, and apparently he's like, I'm talking to the broker and I can get it at 6 times the rent. So I was interested. I went and toured the building and I offered 4.5 times the rent. And I was like, holy crap. So he didn't end up getting the deal, but I thought that was interesting, and the reason why the price from him, the bid was so low, was because the building just needed like so much CapEx. I mean, it's almost as if that was his way of saying, I don't want to buy the building, but like, let me give you an offer anyways. So I think that's kind of the flavor of the day here on these types of buildings. So much of it is like specific niche location combined with basis and condition. Because everyone's cap rate is a little different, right? The way I underwrite and you underwrite and the bank and the buyer. So it's all a little different and nuanced. So it's just very location specific.
The reason why I like the rent multiple, just tells you everything you need to know real quick.
Let's move downtown to 2nd Avenue and Gramercy Park. This is 2nd Avenue between 18th and 19th Street. You're right, in the heart, right north of the East Village. You have mostly 3-bedroom units here. Your average rent is about $5,700 for these 3 bedrooms. This is a heads and beds market. So you really saw this come back, recently in terms of these renovated free market units. A lot of these units are all renovated, but a lot of them are between 5 and 10 years old, and you're still seeing the premium for these rents, especially in this market, your 84% free market, as Seth is pointing out. We're asking 12 times the rent, asking, north of a 5 cap for one building off the corner in a well-located neighborhood where you see a lot of demand, and everyone's experiencing, the rent growth. And even in a more challenging rental season, we think it's going to get even stronger coming up in the real spring and summer months. So I don't have any concerns here with the rents and them going down. I have, I just think it's just a strong rental market and where you are and for the quality of asset you're buying.
Yeah, this looks pretty nice. I noticed that it was a 35 footer versus a 25 footer. So I think you get better layouts on those types of width.
That is 100% correct. The units lay out well. It's great for share style apartments. And we're seeing a lot of demand for this type of 84% free market building.
Very interesting.
The biggest pushback here is just the taxes. Taxes are high. They're about 25% of gross, so I don't think they're going that much higher here. But that's one of the pushbacks. But the selling point is just in terms of, like you mentioned, the frontage and the layouts of the units, and in terms of how the buildings.
See, we've always talked about this. The taxes. Oh, the taxes are too high. The cap rate's not high enough. This is where you want to be buying buildings. The buildings that have a high tax bill. Because if your taxes are 15 or 20% of the gross, they only have one way to go, and their taxes are the biggest destruction of value. So
not to deflate the balloon, but I saw something today that the independent budget office released their preliminary on real estate taxes, and basically they're going to collect more revenue from real estate than they've ever done before. That was their the preliminary independent budget office kind of press release. So we're not going to exactly see where the assessed values come in until January 15th, I believe, but it seems like we're not getting any more. There's not going to be any relief coming. They continue to just fill the budget with real estate owners' pockets.
Yeah,
so that'll always be a factor.
They can. What are you supposed to do, right? If it's a lien against your property, it's not like you can just pick up the building and move it to Florida or Jersey or whatever, like you can with your, wife and kids, right? It's just there. So they're going to tax the crap out of it, and you either pay it or you don't.
Yeah.
This is the heart of Greenwich Village, 120 MacDougal Street. This is a 25 footer. We're asking $826 a foot at a 5.5 cap going in. Also taxes, same, right? You're about 25% of your gross income. You got two strong, actually 30%. So
30.
Same as Seth mentioned before. 77% free market. One of the best, price deals in this category, in this location, that I've seen in a long time. I think Shaun would agree with me.
You get fake IDs here, don't you, on MacDougal?
That's across the street. You got Van Leeuwen. You got two great retail tenants. I don't know if you've tried Van Leeuwen, Seth, but it's a great ice cream place. And they
it's like $7 a scoop.
I know, maybe but NYU students are all over that. So this is part of a bigger portfolio. It's most likely going to get sold individually. We just reduced the price significantly, and we're asking 11 and a quarter. So this is 10 times the rent. So
so why is this one looks like a better deal, actually?
Well, it depends, right? This location, some people are saying, is stronger. However, it's a little busier, more traffic. Maybe it's not where you want to live residential like you do on 2nd Avenue, and where it's a quieter and just north of the action. This is in the heart of the action, right across from the Comedy Cellar and Cafe Wa, which I know Shaun goes to a lot. So again, maybe it's everyone's gonna have a different appetite, but in terms of location, it's still solid, and asking well above a 5 cap.
Yeah, so this is interesting. This building is priced at a higher cap rate, lower multiple, and your average rent is $2,700.
Mostly
one building on 2nd Avenue.
Mostly one bedrooms here.
Right. Okay. So, look, that's certainly a very sustainable rent, right?
Yep.
I like the deal. I definitely like the deal. Okay.
Just
Riney.
amazing to see some of these rent multiples go down in some of the city's best locations. It's an interesting thing to watch, but there's always a supply demand balance. And, you know, when the wind is at your back, there's maybe one or two of these sellers that sell in these areas every year. And the only thing that's making these prices somewhat achievable or attainable, I should say, is just that there's a lot of people selling, and that because of the headwinds. But you know, when things shift to tailwinds, the underwriting gets looser, all of a sudden the same gross income has a higher cap rate, or, you know, and you know, the prices just go up. So just an interesting thing to watch as maybe some of this money from across the country starts seeing the prices that maybe reflect absolute pessimism and jumping back into New York City. This is
right
sorry,
equity. Yeah.
I don't mean
No,
to
I
cut
was
you
gonna
off,
say,
Seth.
like, these people that are calling us saying, oh, I heard New York is, you know, discounted and whatnot. Like, right, you go to these conferences around the country and you're like, oh, like, I would love to buy in New York, but they don't own anything in New York, and the barrier to entry is so high, and like, it's hard to understand. It's not like you can just walk in here and buy a building. You kind of got to like figure it out, just like anything. But
I think there's more and more groups doing that today, though. You know, the amount of capital that we see flowing in from new buyers that, you know, we didn't think would be able to get around some of these rent regulations, or buying it with kind of eyes wide shut or open, however you want to put it. But we're seeing more and more of that. I mean, who's the buyer of this, Shaun?
So this is, you know, the buyer doesn't exactly want to be named, but, you know, very core plus equity check that was written here. Looking at location, looking at basically there's all the drivers that you want out of a New York City trophy asset. You're in the southeast corner of McCarran Park, which is Williamsburg's, you know, public park. You have amazing skyline views, and you have 3 protected tax class buildings, all contiguous. That combined to be 12 big apartments and 3 retail. And so this sold off market, which is why our setup's a little bit fuzzy. Always a good sign if you see one of these. This sold for $21,750,000 off market transaction. And basically, if you look at this high level cash flow statement, you're almost doubling your NOI. And so this traded right around a 4% cap rate going in. But you can get to a 7% cap on costs with relatively minor touch-ups. So you have all free market apartments here. You know, one of the retail spaces was vacant, the Santo Park, and I believe there's already LOIs exceeding the $15,000. I think there's LOIs at $20,000 per month for that retail space. So, you know, if you're in the market looking for what everybody's looking for, you know, I have a lot of people that are like, I wanted to buy that. I'm like, you would have told me you wanted to buy it at a starting out 5.5 cap and just dismissed all the upside. So sometimes you actually have to get creative and really get into the weeds of how you're gonna, you know, extract the most income from a property. And that's what this buyer does. And that's why he gets the off market looks. So again, you want off market deals, make competitive offers on market ones and explain your thesis. And, you know, we'll reward that feedback with more opportunities. So this is a tremendous asset. And if he can build it into a 7 cap on cost, which I believe he will be able to do, interest rates calm down a little bit. We sell it somebody else at a 5 cap in place. There's a huge spread there. And maybe this is a $35 million sale on the end of it. Certainly has the locational appetite to, you know, to be a 2x equity multiple here.
Oh, you think $100 a foot is achievable upstairs?
For sure. You're seeing
You're
a higher.
You're converting the 1s to 2s, and you're going to get what, 6,000, 5,500 for those?
You don't even need to convert in Williamsburg and Greenpoint. It's like less of a bedroom market today than it was in the past. Probably less of a bedroom market than even the East Village. You have a wealthier and wealthier demographic of tenant and buyer moving into these areas. I'm one of them, but I've been there for 8 years.
Compared to the West Village, right? Like that's
exactly. And, you know, the culture is fantastic. So, you know, pretty soon what you don't see on the Williamsburg and Greenpoint waterfront is a tower and a penthouse selling for $25 million. You know, that's kind of reserved for the city, but watch that this will just continue to evolve where a wealthier and wealthier demographic of tenant and condo and townhouse buyer continue to see these areas.
Yeah, interesting. $950 a foot is still below replacement cost because you have all this inflationary pressure. There's no 421A, so you can't build new product. There was never a tax abatement on the building, so there's no like due diligence questions. Oh, is it free market? Is it stabilized? No, it's inherently free market. You got 3 separate tax lots, so they're tax class protected, and you're facing the park. This is like la creme de la creme, right? So
Yeah.
you can still get silly low cap rates for the right type of assets. Nice job.
Absolutely. And just your point about replacement costs, that land in of itself, if there was just land there, would have sold for probably 500 to 550 per buildable foot. So it is still a discount for sure to pick an asset up at 800 a foot and spend 100 a foot and end up at that 950 basis. So
Yeah.
that's my deal of the week.
Congrats on the closing, Shaun.
Thank you, man.
All right, gentlemen. See you guys in January.